There are three kinds of money in the world. There's money that has already been destroyed, like the Zimbabwe dollar or the mark during the Weimar Republic. There's money that's on the verge of being destroyed, the US dollar, the euro, the pound, and many, many more. And then there is eternal money, or nature's money, money that has outlasted every monetary system in history, and that will continue to outlast every system. For the simple reason, as I said, that it is nature's money. It is not manufactured by man. It cannot easily be printed, or it can't be printed at all, actually, or it can't be manufactured. And for 5,000 years, it's been the only money that has survived in history. And that's likely to continue. Now we're at the end of another monetary era, an era that probably started in 1913 with the creation of the Federal Reserve Bank in America. And this monetary era, it will also end like all the others. But since we're talking about now a global crisis and a global debt situation of a proportion that has never been seen before in history, we are also talking about a global collapse, which will be bigger than ever in history. Consequently, the end of this monetary era will be catastrophic for the world. It will be catastrophic for governments. It will be catastrophic for central banks. It will be catastrophic for, obviously, the people, who will have a very difficult time to survive. And they will be catastrophic for world peace, for energy, for food, for social security, for pensions, and also crime, as well as social unrest and wars, will be a major part of the fall of this monetary system. We've seen it already with wars in Ukraine and Middle East, many small wars. We're seeing now how the world is starting to suffer. People are getting poorer, especially the poor are getting poorer. The rich are still rich, but that's not going to last either. We're going to have the biggest shift of wealth in the world from paper assets to real assets. But coming back to money, we've seen, as I said, we've seen money destroyed many times. Take the Roman Empire, the silver denarius between 180 and 280 AD. It went from 100% silver content to virtually no silver content. We saw the Weimar Republic in Germany in 2020 to 23, when the mark lost all its value and hyperinflation was of a proportion that has never been seen before, with peak inflation at 30,000% per month. It meant that inflation doubled every 3-4 days. Or if we turn it around, money halved its value every 3-4 days. Or we can take Yugoslavia, former Yugoslavia in the 1990s, where inflation was 300 million% per month. And obviously, we have the famous example of Zimbabwe with 100 billion inflation per month. So it goes on. And we're now coming to an era when inflation again is going to increase dramatically. We've seen already how the value of money has died virtually in the last 50 years from 1971 when Nixon closed the gold window. And now we're looking at a decline of most currencies of 97 to 99%. Most of them are 99% down, as this chart shows here. The yen, the pound, the dollar, the euro, they're all down 99%. 1% to go means the end of a monetary era. And that 1%, which is, as I point out many times, is 100% from here. And that's going to happen. And that's going to entail, as I said, a lot of political unrest, problems in the world economy, problems also with the geopolitical situation. So it's going to be a very, very difficult time. What is this due to then? Well, it's always due to the same thing. Inflation is not increasing prices that governments blame it on. Inflation means that the value of your money is going down. And that value of the money is going down for the simple reason that governments are printing unlimited amounts or allowing the system to create money that absolutely should not exist because it has zero value. But still, that is a way to buy votes and temporarily hold on to power for governments and make the people temporarily happy. But they're not going to be happy. No population ever has been happy in a hyperinflationary scenario. Just to understand how inflation works, or the drop of the value of money works, if you take, for example, an inflation rate of 15%, I experienced that in the UK in the 1970s. Inflation was around 14-15% every year for about 7-8 years. That means that the value of money halved every 5 years. The value of money halved every 5 years. So whatever you had in your bank account or in your pocket today, 5 years later, it was worth half. But let's take another much more interesting example. about the value of money and about real money that can actually help you rather than destroy your wealth. So in the US in 1926, you could buy a house for $6,000. $6,000 in gold terms was around 300 ounces. So 300 ounces times the gold price at the time, just over 20, that's $6,000. That's what a house was costing an individual. Now, if you take 100 years later, the average house in the US costs around $500,000, and with the gold price at almost $5,000, that means that you can buy today a house in the US for 100 ounces. 100 ounces. Remember that 100 years ago, a house cost 300 ounces of gold. So in gold terms, a house has gone down dramatically. But of course, in money terms, a house has gone from $6,000 to $500,000. So a dramatic increase. But instead in gold terms, it's gone down. It shows you actually in real terms, gold has gone up in value. And that for the simple reason that during the time it was tied to, at a fixed rate, to world currency system, gold was undervalued. And once in 1971, when Nixon closed the gold window, of course, gold went up dramatically, 25 times just in the 1970s. So is gold overvalued today, since you can buy a bigger house for the same amount of gold as 100 years ago? No, I don't think so, because nobody owns gold. Only about 0.5% of world financial assets are in gold today. That's going to change over coming years. Just look at Morgan Stanley recommending now that he holds 20% of his financial assets in gold, as against 5% last year. And I think with the problems we will see in the monetary system, people will no more trust paper money or even paper assets. Stocks and bonds will go down dramatically. And therefore, saving in gold will be the norm for most people. And it's not going to be, as I said, under 1% anymore. It's going to be at least 20%. And I could see it even being higher after the debacle that the world will see as the world financial system collapses in coming years. So the solution for everyone is obvious. Hold some hard assets, hold some gold, hold some silver, store it in the safest jurisdictions outside the banking system, in Switzerland or in Singapore, and don't think that you have to be rich to hold gold or silver. Just an ounce of silver, for example, today costs about $100. It's going to cost a lot more in coming months and years. So please hurry up to invest now and own some silver, own some gold. And you, as I said, start with a little and you can build it up, because whatever you build up will be worth so much more in the next 5, 10, 15 years compared to your paper money, which will be destroyed totally together with your paper assets, as I said, stock markets, bond markets, etc. So please, please, preserve your wealth, help your family, help your friends if you can, own some precious metals, and then, of course, as I always say, enjoy life. Thank you very much. Bye-bye.